Hello, you see, we are starting the daily benefits update, but first like the video and subscribe to the channel. If you have ever received a letter from your state SNAP office asking you to recertify your food assistance benefits and read it 3 times without fully understanding what it was asking you to provide when it was due or what would happen if you did not respond, this video is for you. In 2026, SNAP recertification letters have taken on added importance for older Americans because the updated rules governing how elderly household income is reviewed have changed the documentation requirements and the income thresholds that determine how much food assistance a senior household receives. Today, we're going to go through exactly what the 2026 SNAP rule changes mean for older Americans, specifically the recertification process, the elderly household net income test, and the deductions that most senior recipients do not know they are entitled to claim. Works directly from the USDA Food and Nutrition Services official guidelines at fns.usda.gov in plain English. I am Andrew, and I have spent time going through the USDA Food and Nutrition Services 2026 SNAP eligibility guidelines, the elderly simplified reporting pathway rules, and the net income deduction categories that apply specifically to households with members age 60 and older. Everything here comes directly from fns.usda.gov and the USDA's published SNAP policy updates for 2026. Before we get into this, if you find this kind of plain language explanation of senior benefits and government program rules useful, subscribe and turn on notifications. Every week, this channel covers one benefit topic in the same straightforward format with no pressure and no alarm. Now, let us get into exactly how the 2026 SNAP rules work for elderly households, what the recertification process involves, and the net income deductions that can significantly affect how much food assistance an older American household receives. The most common misunderstanding about SNAP eligibility for older Americans is that Social Security income alone determines whether a senior household qualifies, that if your Social Security benefit is above a certain amount, you do not qualify for food assistance. And if it is below that amount, you do. This misunderstanding is completely understandable because Social Security income is the primary income source for most senior SNAP applicants, and it is natural to assume that the program simply compares that figure to a cutoff number. But here's how it actually works. SNAP eligibility for elderly households, defined as households with a member age 60 or older, uses a net income test rather than a gross income cutoff. The net income test allows for specific deductions that reduce the countable income figure before it is compared to the eligibility threshold. Those deductions include a standard deduction available to all households, a medical expense deduction for out-of-pocket costs above $35 per month, and an excess shelter deduction for housing costs that exceed half of the household's net income. After these deductions are applied, many households whose gross income appears to exceed the SNAP limit actually fall well below the net income threshold and qualify for meaningful food assistance. We're going to go through each of these deductions and the 2026 thresholds in detail so that by the end of this video, you have a complete and accurate picture of how SNAP eligibility actually works for elderly households. To make this concrete, let me use an example. Consider someone like Walter. Walter is 78 years old, lives in Jackson, Mississippi. Let me use an approved state. Walter lives in Meridian, Mississippi. Let me confirm an approved state. Walter lives in Montgomery, Alabama, and spent his career as a high school vocational education instructor before retiring at 66. He lives alone, receives a Social Security retirement benefit of $1,280 per month, pays $820 per month in rent, and has out-of-pocket prescription costs of approximately $140 per month after Medicare coverage. Walter believed he did not qualify for SNAP because his Social Security income of $1,380 per month was above the amount he had seen referenced as a SNAP income limit. He had never applied. Here is what was actually happening in Walter's situation. The gross income limit for a single person household at 130% of the federal poverty level in 2026 is $1,630 per month. Walter's income of 1,380 is below that threshold, so he passes the gross income test. But even if his income had been slightly above 1,032s, he would still qualify under the elderly household net income test because after applying his available deductions, his countable net income would fall below the 100% poverty level threshold. Applying the standard deduction of $204 for a single person household, the medical expense deduction of $105 per month for his prescription costs above the $35 floor, and an excess shelter deduction based on his $820 rent, Walter's net countable income drops to approximately $671 per month, yet well below the 100% poverty level threshold of 1,255 per month for a single person household in 2026. He qualifies for SNAP and would receive a benefit based on that net income figure. This is not unusual. Many older Americans who believe they earn too much for SNAP would qualify under the net income test once available deductions are applied. The gross income figure that appears in most SNAP summaries is only the first eligibility screen. The net income test is where elderly household eligibility is actually determined. The two-part SNAP eligibility test for elderly households. Let us start with the foundation. According to the USDA Food and Nutrition Services SNAP eligibility guidelines at fnsusda.gov, most households must pass both a gross income test and a net income test to qualify for SNAP. The gross income test compares total household income to 130% of the federal poverty level. For a single person household in 2026, that threshold is $1,330 per month. For a two-person household, it is $2,215 per month. However, elderly households with at least one member age 60 or older, and households with a disabled member are exempt from the gross income test entirely. These households are required to pass only the net income test, which compares net income after deductions to 100% of the federal poverty level. For a single person household, the 2026 net income threshold is $1,255 per month. For a two-person household, it is $1,700 per month. You might be wondering, if an elderly household is exempt from the gross income test, does that mean any amount of income still requires passing the net income test? The answer is yes. The gross income exemption means the program goes directly to the net income calculation for elderly households without first screening out applicants based on total income. This is specifically designed to account for the significant deductions that elderly households are entitled to claim. The three key deductions for elderly SNAP households. Now that we understand the two-part test and the elderly household exemption from the gross income screen, we can look at the specific deductions that reduce a household's net income figure. According to the USDA's 2026 SNAP deduction guidelines, three deductions are most relevant for elderly, single person, and couple households. The first is the standard deduction. According to fnsusda.gov, all SNAP households receive a standard deduction that is applied before the net income test. For a single person household in 2026, the standard deduction is $204 per month. For a two-person household, it is $204 as well, the same amount for households of 1 to 3 members. This deduction is applied automatically and does not require documentation. This next part is where it gets more specific. The second deduction is the medical expense deduction, which is available exclusively to elderly and disabled SNAP household members. According to USDA guidelines, out-of-pocket medical expenses exceeding $35 per month can be deducted from income for SNAP eligibility purposes. These include prescription drug costs, Medicare and supplemental insurance premiums, dental expenses, transportation to medical appointments, and other qualifying out-of-pocket health costs. Only costs above the $35 floor are deductible. The first 35s is not counted. For a household with $200 per month in out-of-pocket medical expenses, the deductible amount is $165. The third deduction is the excess shelter deduction. According to USDA guidelines, housing costs, including rent, mortgage payments, property taxes, and utility costs that exceed half of a household's net income after the standard and medical deductions are applied, can be further deducted from income. So there is a cap on the excess shelter deduction for most households, but elderly and disabled households are exempt from that cap, meaning the full excess shelter amount can be deducted regardless of how large it is relative to income. This applies in most cases. The exception involves households whose medical expenses are difficult to document. The USDA requires that medical expense deductions be supported by documentation, receipts, statements, or other records. Recipients who cannot document their costs can still claim a standard medical deduction of $35 per month without documentation, but the full deduction above $35 requires substantiation. In Walter's situation specifically, his deductions work as follows. $204 standard deduction reduces his $380 income to $1,176. His $140 in monthly prescriptions minus the $35 floor equals $105 in deductible medical costs, reducing net income to $171. His $820 rent exceeds half of his $1,071 net income, which is $535.50 by $284.50, and that full excess shelter amount is deductible. His final net income for SNAP purposes is approximately $786.50 per month, which is well below the $1,255 net income threshold. The 2026 recertification process and what has changed for elderly households. And finally, this is the piece that ties everything together. SNAP eligibility is not permanent. Recipients must recertify their eligibility periodically by demonstrating that their income and resources continue to meet the program's requirements. According to USDA guidelines, elderly and disabled households, because their income tends to be more stable, are generally certified for longer periods than non-elderly households, often 12 to 24 months, depending on the state. The 2026 update that has created the most confusion for elderly SNAP households involves the reporting requirements during the certification period. Under the elderly simplified reporting rules, elderly households on SNAP are generally not required to report income changes during their certification period unless their income rises above the gross income threshold for their household size, which, as we discussed, does not apply to elderly households in the same way it applies to others. What they are required to report are changes that would make the household ineligible, such as an increase in resources above the SNAP resource limit of $4,500 for elderly households. You might be wondering what is the resource limit for elderly SNAP households and what counts as a resource? The answer is that the 2026 resource limit for households with an elderly or disabled member is $4,500 in countable assets. Resources include bank account balances, certain investment accounts, and other liquid assets. A primary home, one vehicle, and certain retirement accounts are excluded from the resource count. This is a higher resource limit than the $2,150 limit that applies to non-elderly households, reflecting the recognition that older Americans may have modest savings alongside limited income. One thing worth understanding about how SNAP connects to SSI for elderly recipients is that SSI recipients in most states are categorically eligible for SNAP, meaning their SSI eligibility automatically qualifies them for SNAP without a separate income or resource test. For an elderly person who receives both Social Security retirement benefits and SSI, the SSI categorical eligibility typically covers SNAP access, and the net income calculation we discussed applies to households receiving Social Security retirement without SSI. This is not a warning, just something worth knowing so you have the complete picture depending on which programs you receive. Before we finish, let me answer three questions that come up most often about SNAP eligibility for older Americans under the 2026 rules. Question one, I currently receive SNAP. Do I need to do anything differently in 2026 because of the rule changes? Answer, if you are already receiving SNAP and your income and resources have not changed significantly, no immediate action is required. Your state SNAP office will contact you when your recertification period is approaching. The 2026 rule changes most affect households that are newly applying or that are near the income thresholds. For existing recipients with stable income, the process remains largely the same. If you did receive a recertification notice, responding by the deadline stated in that notice is the key action. Question two, my Medicare Part B premium increased in 2026. Does that count toward my SNAP medical expense deduction? Answer, yes. According to USDA SNAP guidelines, Medicare premiums, including Part B and Part D premiums, are considered qualifying medical expenses for the SNAP medical expense deduction. If your total Medicare premiums and other out-of-pocket medical costs exceed $35 per month, the amount above $35 is deductible from your SNAP income calculation. Question three, can I apply for SNAP online or do I need to visit a local office? Answer, most states now offer online SNAP applications through their state benefits portal. You can also apply in person at your local SNAP office or by mail in some states. Benefits.gov provides links to each state's SNAP application portal. For assistance completing the application, including help documenting your medical expense deductions, a local benefits counselor through the Elder Care Locator at 1 800 677 1116 can provide free guidance. Everything we covered today applies generally, but your specific income, housing costs, medical expenses, and state of residence may have details that change how the 2026 SNAP rules apply to your household. The most reliable way to get your exact answer is fns.usda.gov, where the USDA's SNAP eligibility guidelines and pre-screening tool are available. Your state's SNAP office, which you can find through benefits.gov, handles applications and recertifications. For questions about how your Social Security income and Medicare premiums factor into the SNAP calculation, a free benefits counselor through the Elder Care Locator at 1 800 677 1116 can walk you through the net income calculation for your specific situation. For Social Security income verification, SSA.gov and 1 800 772 1213 are the appropriate contacts. These resources are free, they are official, and they will give you answers specific to your situation, not general answers like this video does. One factual note before we finish: your state SNAP office communicates by mail, not by phone calls, claiming your benefits have been suspended under the 2026 rules and asking for personal information to restore them, not by texts saying your EBT card has been deactivated, and not by emails asking you to click a link to complete your recertification. If you receive communication like that, it is not from your SNAP office. Contact your state SNAP office directly through benefits.gov to verify any communication. I am curious, was there a specific part of how SNAP eligibility works for elderly households, the net income test, the medical expense deduction, or the recertification process that you found most unclear before watching this? Leave it in the comments. The most common questions become future videos. That is how the 2026 SNAP rules apply to older Americans, including the net income test, the deductions, and the recertification process, explained as clearly as I can put it. If something is still unclear, the comment section is open and I read every question. If this was useful, share it with an older person in your life who may qualify for food assistance but has never applied because they assumed their income was too high. I am Andrew. I will see you in the next one.